Someone at Wall Street has predicted Tesla will be worth only $25 in a year's time, whilst others are predicting Tesla to soar to above $500 in the same period. Who is more likely to be correct? That's what we are going to be answering in this video. Starting off with price targets from Wall Street, we can see that the lowest forecast is $25 and the highest prediction is for Tesla to be worth $577 in a year's time. Looking at this in more detail, we can see that the forecast for Tesla is largely to the downside. However, these price targets are more reasonable than the $25, which in my opinion is far too pessimistic. It's also important to approach these predictions with caution as analysts revise their price targets over time. For instance, George's initial price target was $278, however, in the same month, he revised it up to $298. When there is pessimism surrounding a stock from Wall Street, it's key to get in at a good price, and one of the ways to do that is to buy at key support levels. The best method I know of to find key support levels is using this Fibonacci retracement tool. So if we have a look at the price here, we can see that from this low, price went up to this high before it started retracing. The way Fibonacci retracement works is these lines act as support levels for the price when the price starts retracing. So we can see we found some support at this level and we are currently finding support at this level. If you're looking to get into Tesla, these are the levels you want to be looking at and potentially buying at. So the first support level here is $383. The level below that is here, and this is $351. And this level here is $318. Investors that follow the Fibonacci like to buy initially at the higher support level, and if the price drops to the next level, they dollar cost average. That could be a strategy worth considering. So that's the entry side. However, getting a good entry is only half the battle, and it's equally important to have an exit strategy in place. One of the ways we can create an exit strategy is by using this Fibonacci extension tool. And using this tool, if we do something similar to before, going from this low up to this high, but this time if we pull the tool down to where this retracement has ended, we see something like this. And the way this works is price usually tends to find resistance at these Fibonacci levels. Investors following the Fibonacci lock in some of their profits around these Fibonacci levels, which puts them in a good position to buy back at a discount if the price retraces. The first level where we might see some resistance and where you might want to consider locking in some profits is around this area, and this is $477. The level above this is $509. This is $542. And the final level here is $588. So this is a potential exit strategy you can follow. You might be wondering whether I am holding Tesla, and the answer is yes, I am. I first bought Tesla back in 2019, and the way I discovered it back then was by looking at some trades that politicians had made. Making investments based on trades politicians have made is a strategy I follow till today, because the returns from this strategy have been greater than any other strategy I've come across. I put together a free guide that teaches this strategy, and I've put a link to it in the description below. Feel free to check that out if you're interested. Also, I'll be making update videos on Tesla as the price reaches key levels, so feel free to hit the subscribe button if you're interested in staying up to date. It's worth mentioning that I'm not a financial advisor and this is not financial advice. Please make sure you do your own research and your own analysis before you enter any stocks. That brings us to the end of the video. If you could hit the like button before you go, that would be much appreciated. Thank you for watching, and I will see you in the next one.